Well, today I want to think about market declines, what they are, what we call them, how often do they happen, how long do they last, those types of things. Now, there's a lot of nomenclature out there in terms of, you know, crashes and bear markets and corrections. So that these charts here will give you an idea of what people typically mean when they say something like this. Although it is far from universal that these are, the precise names for these types of market declines, but that'll give you some sense there. Feel free to pause it if you want to take a longer look at that. Let's take a look at a correction. So we're going to say here that corrections are declines of 10% or more, depending on what time period you're looking at. These types of things happen, once a year, maybe a little bit more frequently, and then they'll last for 3 months or something like that. That's the kind of thing we'll see here. Again, it depends on when we're looking at it. In fact, we can go back and look at all of the 10% corrections since World War II, and we can see them here. We can see that they do go in clusters. We see a lot in the 70s. And then recently we've seen quite a few too, so that they're kind of clustered there a little bit, which makes these the differences between these time horizons make sense. Then we also have bear markets. We're going to call that declines of 20% or more. These happen, say once every 6 years, and they'll last for a little over a year. We can see them, here going back to the Great Depression, which was obviously very severe, and we see little pockets here and there. But the good news is that when we're not in these bear market territories, the stock market does pretty well. So if you can live through these periods, then it's very tolerable in the long term. Of course, there are crashes, so these are things that happen very rarely, but these are the big market declines, and we can see a number of those here. Just six of them, but they're very severe, last a little bit longer. But again, in general, when these things aren't happening, the market is doing pretty well. One thing that we should point out here is that kind of the worse it is, then the kind of longer it takes to recover. The worse it is, the less infrequent it happens, or the less frequent it happens. Sorry, etc. Here's one way to look at it. Kind of another way to look at it here is you can see that the big declines they happen less frequently. So the number of days since the last time we saw one is higher. The average number of times, the average number of days between these types of things is longer. And these little, 5% little drops really happen pretty frequently, and they're nothing to worry about. Ultimately, again, with the stock market, I think you really need to think long term and think about it as a long term play. And these drops, some not so little, become more tolerable as your time horizon increases. Thanks so much.